Good morning. It has been a good Monday morning already. We had the China deal get done this weekend, and you can see here we had a huge up move. That's about 500 points on a 15-minute chart there. So that occurred off the open last night on the futures market. I got in here this morning started about 7 o'clock Central Time, 8 o'clock market time. And you can see my first trade here, I bought basically after this bar rejected here. We came down and we made a bottom, and then we went green, green, green all the way up, which indicates a large order. We got a rejection off of this bar here, and I bought there, and I closed there for just under about 15 points. Somewhere in here, because we hit the 5 moving average, I went long again. I'm looking at this now. This doesn't look like a very good trade setup, but I'm not sure what I did there. But I went long and I lost a few points there. I lost about 10 points there. So I was up a little over, I remember being up a little over $100 a contract. Now, the cool thing is, for some reason, one of my 5 contracts did not fill on this order. So one of my contracts did not take a loss. And that's ended up proving to be beneficial as we move forward. So we had this bar here, and this essentially became a balance point, because this is kind of where we broke out from. So we came down, came back below this. When you have these series of bars where they go red, 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 once you get a green bar breaking that series, that's usually the end of it. And these occur after this. We had a series of green bars coming up here where we had no red bars. That is not natural trading. That is an order. That's either manipulation or it's a large institutional order driving that up like that. The same thing here. This is an attempt by the market makers to balance back down. The market makers' goal is to remain delta neutral, which simply means they don't have a short or a long position. So when somebody's doing a lot of buying or somebody's doing a lot of selling, the market maker has to take the other side of that order. That's what they're there for. And so their inventory essentially gets out of balance. And the best way to describe it is that, if they sell green balls and red balls, well, they sold a lot of green balls. They didn't sell any red balls. So now they're gonna get some people to buy some red balls, and then they're gonna get their inventory back, and they're gonna be able to buy some of these back. And it's kind of a super simplified way to think of it, but they're just balancing their inventory. But once we broke the top of this, you can see that I got back in, and I followed this up with a moving stop, and I got back out here, and that was a good 10-point trade there. About that 23-14, yeah, about 9 points. Now we came up here and we made this top, and we were up near this previous high. So one of two things is going to happen when you approach one of these previous swing highs. It's either going to fail and come back down, or it's going to push over. Now, if you look at our moving averages here, price started going sideways into the moving average. That is a really common pattern that you see. And you will see that once it goes sideways, it usually pushes on up with another leg up. So as soon as this started rejecting, I went ahead and got back in, and I actually followed this up with a sell stop here. But if you look at this blue line here, this is another balance point. If you look at this red bar had been untested. So this top of this red bar here, where this green bar is a balance point. So we got here. Sure enough, what happened? We got a balance. So I got out right here, and I missed about 5 points there that I should have gotten. But you're not always going to, you're not going to buy at the bottom, sell at the top. That's not how trading works. And we're coming back down here. We've got a balance point right here, but I'll be honest with you, at this point, I'm up pretty good. So I'm probably not going to buy again. So when we broke the top of this red bar, I bought in again, and I followed this thing on up, because it became clear to me then that we were not going to put in we were not going to pull back. We came back up, and this bar moved up with some acceleration. So I went ahead and got back in here and I followed this thing up and got out there. So I've had, I guess that's 4 winning trades and 1 losing trade, or 3 winning trades, 1 losing trade. So the bottom line today is I am up on average about $750 per account. The total is I've still got one account that didn't get filled. I'm still having some software issues. So we're up about $4,000 is what this worked out to be today. Now the market's probably going to jump up a bunch today, but you don't want to go crazy on these days like this where the market's really moving. Just make your money and get out. Don't look at these days a whole lot different than you look at any other day, because if you start trying to get rich, you'll usually end up going broke. So the best thing is just make your money, get out, and be happy you had a good day. So we'll see you guys tomorrow, and I hope that my goal here is for you guys to kind of learn how the market works and learn how I make these trades. So hopefully you're learning something if you're taking the time to watch these videos. We'll see you tomorrow.